So we're talking about signs that you may be saving too much, that you may be moving into financial miser territory. I think that this next one, Brian, is one that I know I particularly have been guilty of in the past. And it's that you're sacrificing your health to save money. Now, this is where this happened for me early on in my financial journey.
This is back when it was Bo Big Spoons Hansen, because all he ate for lunch, dinner, and breakfast was General Mills cereal.
Look, Publix had a 2-for-1 deal, and you couldn't beat it. So I could go to Publix, and I could literally buy 14 boxes of cereal, and I could just plow through those things. And, buddy, I was maxing out my Roth IRA. I was putting money in my Simple IRA at the time, then it turned into a 401. I was able to save money, but was that the best decision? Likely not. That's probably not where you want to be. So you want to make sure you're not sacrificing your health simply for a financial benefit.
Health is wealth, and I don't want people to get to 7 figures and beyond, but you're the unhealthiest version of yourself. So that's why when we talk about the problem here is, yes, you're a great saver, but if you're not buying life insurance to protect your family members, if you're not buying health insurance just because you don't want to pay those premiums, what if you don't even want to go to the doctor because you just, it costs money. You don't want to make healthy food decisions at the grocery store because it costs you additional money. You have your family driving around on bald tires in a car that you don't even know if it's going to crank up. These things should hit you to your core. Is that there's one thing to be good with money. There's another thing to just be so tight and miserly that you're actually impacting your health and living your best life.
Another problem that you could see is that if your lifestyle is the exact same as it was decades ago. Now, on the surface, that might sound great, but in reality, if you're doing things the way you're supposed to be doing them and you're moving in the direction that you should be doing, your lifestyle likely should be inflating. And that's okay. Yeah, maybe in your 20s, you made the decisions that you ate this certain type of food. But as you move through time, maybe your dietary decisions become a little bit wiser. Maybe you exercise a little bit more. Maybe you drink a little bit more water throughout the course of the day. These are all signs that you are growing and evolving just as your financial situation is evolving. But if you're living the same way today that you did when you were 19 years old, that may be an indication that you've not adjusted accordingly.
Well, and I'll bring it. Look, being the person who's in 50s and beyond now, is you have to kind of, when we think about this, you have to choose your hard on, and that's, I don't cut corners when it comes to building my health. I mean, because I know that we only get, it's kind of, if you saw that documentary with Warren Buffett, it was on HBO years ago. He opens up the entire thing talking about what if you were given one car? It could be any car of your choosing, but it had to last your entire lifetime. He's talking about your body.
That's right.
Is that you, no matter what gifts, talents you have, you only get this one body. So you better treat it with the respect and treat it accordingly. So you actually live your best life. You don't want to be, wealthy but immobile.
Wealthy but unhealthy. Yeah.
I mean, it's just that's not where health and wealth intersect.
So what is the solution here? Don't cut corners when it comes to your health and when it comes to your safety. If you're someone out there who has all the money in the world, but you don't have life insurance, or maybe you have the greatest income in the world, but you don't have life insurance and you kick it, what have you really accomplished? If you're out there with no health insurance and you're not actually protecting yourself against the unknown unknowns, there's a really good chance you're putting yourself in a precarious financial situation where all you are is one slip, one unknown away from absolutely causing your entire financial life to collapse. So don't cut the corner. Do the hard thing now so that you don't have to do the hard thing later.
Yeah, I mean, you've heard me tell the story. I had that crossroads at age 40, and now I like to think that I'm a better version of myself even in my 50s than I was maybe even in my mid-30s because I took a lot of health for granted. And I think that's probably a good segue into, I want you to understand it's okay to enjoy your success.
That's right.
This is, Bo and I both have traded in on what we call our tight-wad cards. And I think the reason is, and I've talked about this in Millionaire Mission and others, is that we talk, your lifestyle will inflate. It's just, but do it just like you've done everything else in your life. You can do it in a disciplined manner, whereas you get a pay raise. Why not 60% of that goes towards increasing savings? But then, you can let 40% go to expanding your lifestyle, living a better life. And if you can keep those ratios in check, you'll probably end up in a really good place where your army of dollar bills is still going to be able to replace whatever lifestyle expansion you've occurred because you kept that ratio in a really healthy way.
And maybe that 40%, what it's going to is maybe it's buying healthier food, or maybe it's finally signing up for that gym membership, or maybe it's increasing the life insurance or opting for the better health insurance plan. It's okay as life moves on to make those kinds of decisions. That's the way that the financial journey is supposed to look. All right, so we're talking about these signs that you might be saving too much for retirement and not living the way that you ought to live. And this, Brian, unfortunately, I think that this is the one that is the most common and the one that we see most among financial mutants, and even financial mutants that end up taking it to the next level and becoming clients, is that they reach this place where they have surpassed all of their financial goals. They are indeed financially independent, and yet they're still saving, they're still moving forward, they're still trying to build
And don't
more.
mishear us. We're not going to tell you you have to just shut it all down. You've won the game, but we at least want you to hit the pause button and start running some calculations, stress testing your financial future to make sure that you are intersecting it with all your other life goals as well. That's the big thing. I mean, so make sure you're doing the work. How does this look if you do the napkin financial plan, the 4% safe withdrawal rate? If you look at your assets, you look at the 4% safe withdrawal rate, and then you compare and contrast, and if you don't you're like, holy cow, what am I doing? I mean, I think it might draw clarity that you can do things a little differently and still have success.